Hello again traders, doing trouble there from Drfx, swing trading mentoring. We're going to be taking a look at the reason for the trading loss that was incurred on the New Zealand Japanese yen, which as I had said before, had to do with the size of the candle that was traded for this setup. Now of course, everything is done within the context of the formation of consolidation. We will either be trading the early waves that lead to the formation of consolidation, or trading consolidations that have already been completed. And the idea behind the trade on the New Zealand Japanese yen was to trade the early waves that looked as if they were going to be leading to the formation of a consolidation setup. Of course, everything is done within the context of the daily chart and the 4-hour chart in terms of market direction and entering to take advantage of movements, with the goal of capturing between 50 pips and 70 pips for the most part within a 24-hour holding period. Now this was a setup on the FX Pro trading platform, which is the one that I actually use for live trade execution and for my chart analysis. However, when it comes to actually determining the entry signal, the actual signal that we're going to be trading, I actually use FXCM, the FXCM platform, mainly because I found that the candle that they provide is based on the New York close of the daily candlestick signal. And those tend to be pretty accurate, and they form the basis of candlestick-based trading methodologies like mine. So that is why when it comes to actually determining the actual size of the candle and whether or not the candle is actually appropriate, I actually use the FXCM platform. Now, this was a chart setup that I sent to you based on my FX Pro live account, where this was a setup where the market looked as if it's going to be forming a bull crown setup, and that it would rally towards this area here, where it was expected to be forming the resistance boundary of this overall pennant setup. Now, this was a signal given, and the stop loss was placed below the uptrend line on a 1-hour chart to protect the trade. And the target was set at 78.70, with a goal of hitting the target at this area here, just below the resistance point of this area here. However, unfortunately, as you can see, the market did not move by much and eventually reversed and took out our stop loss. Now the reason for this is that this candle here was much too large. It exceeded the 2 centimeter maximum, which is what I found to be the maximum that can any candle above this size generally is found to be very risky. So normally what I do before I execute a trade on my live account with FX Pro, I normally confirm the size of the candle using the FXCM platform. But unfortunately that slipped my mind at the last minute and I forgot about it. So that is why I did not confirm this. And if I had, I would have seen clearly that this was much too large of a candle, and it exceeded the maximum level or size beyond which the market usually becomes risky. So candlestick signals that are smaller than this are normally the ones that we normally trade, and so anything above this is normally too risky to trade, and it's no surprise that the market actually reversed and took out this candle. So it looked different on the FX Pro platform, and I did not confirm it on the FXCM platform. And this was why the loss was incurred on this trade. So this was an oversight on my part, a tremendous oversight. It's not going to be repeated in the future. And 9 out of 10 times I normally confirm with the FXCM platform, but on this occasion I failed to confirm it. So that was the reason for the loss. So that was a big mistake on my part, which I will no longer repeat. So that was the reason for the trade and the trading loss. The overall setup was a strong setup, but at the last minute, and the most important detail was the fact that the signal itself was not appropriate to take advantage of this movement.